Welcome to the Quickbooks video series hosted by Protea Academy. In episode 14, we'll take a look at inventory adjustments. There are a few inventory adjustments that can be done in QuickBooks. Let's take a look at a quantity adjustment. Go to the left-hand pane and click on the plus new button. Under the other list, you'll find inventory quantity adjustment. Click that to bring up a separate screen. On this screen, you can either increase your inventory quantity or decrease your quantity. Choose the date you want to have an inventory quantity adjustment and then the account you will be using. Generally, you'll use a cost of goods account on your profit and loss statement. Choose the product you wish to write down or write up and then fill in the new quantity on hand. This will automatically populate your change in quantity then. You should also add a detailed memo as to exactly why you're writing up or down your inventory. For instance, there could have been theft, obsolescence, or lost stock. Once you're happy, save and close the screen. Let's go to our reports and pull up our inventory valuation summary. This is a summary of all the inventory on hand at a specific date. Let's look at the product we just wrote off. As you can see, the quantity on hand is now 0. If you click on the quantity, it will take you into the detail of this inventory item. Let's pull this for the current year. Now we can see all the detail that is sitting in this inventory item, whether it's quantity adjustments, bills, or invoices to customers. As you can see, here is our inventory adjustment of the 2 units, taking the quantity down to 0. Let's go back to our report list and look at the profit and loss report. Let's go find our inventory shrinkage account. This was the account that we used for the inventory write-off. If we click on this account, we'll be able to see the detail of our inventory write-off. Over here, we'll see the detail of that quantity adjustment and the write-off in dollar value. Let's click on the inventory adjustment to go into the original screen we had. If you go down to the more, you can click on Transaction Journal. This will show you exactly what entry was passed when doing an inventory quantity adjustment. Now we can see that it's decreasing our inventory asset balance sheet account and increasing our inventory shrinkage account sitting on our profit and loss under cost of goods sold, showing that we wrote off 2 units of inventory. Let's go and look at another way of bringing inventory into QuickBooks. If you already have a product and SKU in QuickBooks and you want to increase the inventory, for instance, you buy inventory from a vendor that you are going to resell, then we'll bring that inventory in via bill, as we don't want to carry on creating new product and SKUs for the same product. First, we need to choose the vendor we bought the inventory from. We then need to set up our dates correctly so that the inventory is brought in at the correct date. We'll then usually use the category details, but when we're bringing in an inventory item, we want to use the item details. This allows us to select the product and SKU already in QuickBooks. We then add how much we're bringing in quantity, and at what rate. The rate can be inputted or It can be from the previous bill. Make sure that your total amount matches the bill you've received from your vendor. You can also add a memo as to what you are purchasing. Once you're happy with your bill, click Save and Close. Back on our inventory valuation summary, we'll now see that the quantity has increased for the bill that we just processed. Let's take a further look at the details. Over here, we'll now see the bill, increasing our quantity by the units we now brought in. We can also see that Quickbooks uses the FIFO method. And because we wrote off all our previous stock, the only stock we still have on hand is the stock we just brought in via the bill at $75 per unit. Let's quickly create an invoice and show you that it's using the FIFO method. Let's just copy the invoice we've already have in QuickBooks. Just change the date to this month and then save and close. We can now see that the inventory was invoiced out at the $75 cost using the FIFO method. Let's go back to our inventory valuation summary. As you can see on the inventory valuation summary, it will show us the quantity as well as the asset value of the items on hand. In the last column, it does show you the calculated average. Let's quickly add another bill in at a different value. Following the same steps we've done previously to add the same product and service at just a different unit cost. Let's save and close this bill and go back to our inventory valuation summary to see how the calculated average looks. Because we have two bills at different values still on hand, the calculate average is now the average of those two bills. Thank you for watching the QuickBooks video series hosted by Protea Academy. In an upcoming episode, we'll look at vendors.